Gold prices are up quite a bit today, first time in a long time, and we're here with Paul Tustain of BullionVault. Paul, thanks for being in.
It's my pleasure to be here. Thanks very much for asking.
Now, Paul, we know that you are one of the largest online sellers of gold. Can you tell us a little bit about BullionVault?
Well, sure. BullionVault's got a very simple mission. What we do is we take the most trusted bullion in the world, the bullion that's traded by the professional banks and the refiners, and we make that available to private investors all over the world. So we've got about 40,000 customers. They average about $50,000 each, so that's a 2 billion stock of gold which is available, which is stored in London, in New York, in Zurich, and now in Singapore as well.
And so why do you have different locations where you store the gold?
Well, most of our customers will try and keep some gold at home where it's accessible, and they'll try and keep some overseas because they regard one of the risks through history for gold buyers has been the possibility of capital controls. So keeping some gold out of the country tends to protect you from that.
So you're in from London this week with us here in New York, which is fantastic. So a lot of people are very familiar with Fed actions, but what do you see in terms of central banking in Europe, the UK, maybe even Japan? What are you telling your customers about the easing coming out of there?
Well, clearly what's happened in the UK in particular, Japan recently, is they've been copying American easing policy. Now, I don't think many people are too worried about what's happening in the States. You've got a strongly recovering economy, probably based on oil production. There's still a lot of money being printed, as we all know. What we've got elsewhere in the world is not the same recovery, but the money being printed just as fast. And I think, although there isn't a direct risk to the US, there is an indirect risk, which is that we could see the monetary policies being... Britain now is very exposed. The UK is very exposed to quantitative easing. Clearly the Japanese are trying to borrow it. They're hoping for the same success. What we could see is that developing into a bond glut. Bonds, by their very nature, run down the clock to redemption. That can turn into a cash glut. We could see one of these countries, won't be the US first, but we could see one of these countries descend into some sort of inflationary spiral, which is what the traditional analysis would expect to happen. It won't happen here as a direct result of a bond glut, but it could happen as a sort of secondary effect as investors lose faith in sovereign bonds.
So, Paul, it seems like you're saying for at least the long term, we're still seeing a lot of easing coming out of central banks, which makes the yellow metal a very appealing asset for people.
Let me, if I can leave you with one thought. Currently, the rate of printing, even here, is $25 per working American every day of the year. That's money creation that gets soaked up into the bond market. That is simply unsustainable in the long term.
Well, Paul Tustain, thanks so much for being with us. We hope to have you back whenever you're back in New York.
Thank you very much. Thank you very much indeed, Jay.